Welcome to the deep dive. We got this really fascinating report sent over from Nueconomy's Counterfactual series. It's one of those pieces that genuinely makes you stop and think, asking those big what-if questions.
Absolutely. And the one you flagged for this deep dive is, well, it's a big one. Takes us right back to a really pivotal moment. Think late 80s, early 90s.
Right. German reunification happening, London's just had its big bang, Wall Street's booming.
And Germany is standing at this crossroads. A fundamental choice, really.
Do they ride that sort of global wave of financialization, build up services, or do they stick to their knitting, double down on that incredible manufacturing base? Middle stand.
And this deep dive explores that first path. What if Germany had chosen finance? What if they had really gone for it, aiming to be a global financial hub? The ripple effects laid out in the report are, well, pretty surprising. Let's walk you through it.
Okay, let's get into it. So according to the report, how does this alternative Germany actually start to look different? The first big change seems to be how it treats its own industrial heartland.
Exactly. Instead of nurturing the middle stand, those super solid, often family-run industrial firms that are the backbone, now the incentives just flip.
So encouraging them to sell up or move production overseas?
Precisely. Much more aggressively than in our timeline. Think less emphasis on made in Germany, maybe more financed in Frankfurt.
And the banks, the big German banks that were always so tied into funding industry, apprenticeships.
They pivot hard towards global finance. They're chasing those international returns, not investing patient capital in local factories back home.
And Frankfurt itself, it's not just growing, it's actively trying to muscle in and become the European financial center.
Yeah, aiming to be a real competitor to London, maybe even New York. Perhaps trying to create its own specific model of finance. The report jokes it needed better restaurants first, but the ambition described is serious.
Okay, but this isn't just a Germany story, is it? If Germany steps back from manufacturing, that leaves a huge hole in Europe's economy.
A massive hole. And the report asks who fills it. It looks at France, Italy, the Nordics.
And the conclusion is?
Basically, none of them quite could. Not in the same way. France has industry, sure, but it's different, more state-led, maybe less of that deep, precise engineering culture across the board.
Italy's got great smaller firms, but the scale.
Right, not the same scale or structure. And the Nordics, while high-tech, just don't have that sheer industrial weight Germany provided. That kind of manufacturing base, built over decades, you can't just replicate it overnight somewhere else.
Wow. Okay, so that already changes Europe. What about further east, Central and Eastern Europe? In our timeline, German firms moving production east was huge after the Cold War.
A key part of their integration, absolutely. But in this counterfactual, without German manufacturers leading that charge,
who moves in?
The report suggests maybe Asian manufacturers. It posits that, perhaps Chinese companies might have established their main European production hubs in places like Poland or the Czech Republic much, much earlier. Decades earlier, potentially.
So those countries developed differently, less tied into a German supply chain, more plugged into maybe Asian-led global ones?
Could be. A completely different economic geography for the region.
And then there's the Eurozone itself. We know the current tensions, right? Germany's huge export surpluses.
Massive surpluses.
Yeah.
Which creates those imbalances, the political friction. Germany exporting goods, accumulating surpluses.
While Southern Europe often ends up importing and accumulating debt to balance things out, all within the same currency. The report had that great analogy.
The family restaurant versus McDonald's one.
Yeah, like Portugal or Greece trying to compete with German efficiency under one currency. It's incredibly tough. If your costs are different, you get squeezed.
Exactly. But here's the twist in the counterfactual. A financialized Germany might act more like, say, the UK or the US.
Meaning?
Running trade deficits, importing more goods, exporting financial services, software, that kind of thing.
And the report suggests that might have been better for the Eurozone.
Counterintuitively, yes. Potentially more stable politically. Because you wouldn't have that constant tension from Germany's massive surpluses needing to be recycled, often creating debt elsewhere. It removes a major source of friction.
Huh. Okay, that's interesting. But what about the cost to Germany? Losing that manufacturing edge isn't just about factories closing, is it?
Not at all. It's about losing entire ecosystems. Those world-class apprenticeship programs you mentioned, the tight links between universities and industry, the whole culture of patient capital willing to invest long-term.
Things that are very hard to rebuild once they're gone.
Incredibly hard.
Yeah.
And the report does point to Britain here as maybe a cautionary example. Finance creates wealth. Yes, often huge wealth.
But concentrated wealth, right. Often in specific places, benefiting fewer people.
Whereas traditional manufacturing, for all its own challenges, tended to support broader middle-class employment across more regions. That's a huge trade-off.
Okay, let's zoom out even further. Global impact. German industrial tech. The machine tools, the car engineering, all that specialized stuff.
Yeah.
That was pretty crucial for countries like China and India as they industrialized, wasn't it?
Absolutely essential in our timeline. They were key suppliers of the machines that make the machines.
So without Germany playing that role,
Yeah.
what happens? Do China and India industrialize slower? Or do others step in? Japan, the U.S.?
The report suggests Japan and the U.S. would likely have dominated those industrial technology markets much more. It changes the whole global pecking order in advanced manufacturing tech.
And the global financial system. A finance-focused Germany wouldn't just be another player, would it?
Probably not. It could become a really significant force, maybe even developed a distinct German or European model of finance, genuinely challenging the Anglo-Saxon dominance from London and New York.
How so?
Well, perhaps combining that German knack for position and organization with financial innovation. The report floats the idea this might have led to deeper, maybe more competitive European capital markets than we actually have today.
Let's bring it down to specifics. Cars. EV auto industry. Germany has been obsessed with perfecting the internal combustion engine for decades.
Relentlessly. So the report asks, without that intense focus, that particular path dependency,
Do we get EVs sooner? Does that technology maybe break through faster, perhaps driven by Asia or Silicon Valley, because Germany isn't pouring all its genius into optimizing petrol engines?
it's a fascinating thought that German excellence in one area might, ironically, have slowed down a different technological revolution globally.
And inside Germany, the labor market, that famous apprenticeship system geared towards making things right.
Fundamentally,
Mhm.
around 60% of young people go through vocational training, often linked to manufacturing skills, with roots going way back.
So a services-led Germany, it would probably shift towards more flexible, maybe Anglo-Saxon-style labor market.
Likely, yes. The report suggests you might see higher youth unemployment, at least initially, as that system adapts. But perhaps down the line, more labor mobility.
And the whole social market economy model Germany is known for.
It might not have evolved in quite the same way, though the report does have that little joke, reassuring us you'd still find plenty of types of German bread, even in this alternate reality.
Some things are sacred. Okay, what about supply chains? We hear so much about those German hidden champions, the companies making vital, super specialized parts.
They largely disappear, or at least their German base would, and without that layer of high-spec German components and machinery.
Global manufacturing gets less sophisticated.
Potentially less optimized, yes. But the flip side, the report suggests, is that supply chains might actually become more resilient
How so?
because capabilities wouldn't be so hyper-concentrated in Germany. Production knowledge might be spread across more countries, making the whole system less vulnerable to shocks in one place. More distributed, if less peak efficient.
And policy, the EU level. Without that huge German manufacturing lobby in Brussels pushing its interests.
You can see very different outcomes. Trade policy might look different. Competition rules may be less focused on protecting big industrial players.
Even environmental rules.
Possibly. Environmental regulations might have taken another path without the powerful German auto and chemical industries weighing in so heavily on the discussions.
It also touches on innovation patterns. German engineering excels at that steady incremental improvement, right?
Making things better, more reliable, step by step. Continuous improvement is key.
So without that strong force for incrementalism, does the world become more about big leaps, breakthrough innovations?
Maybe. The report speculates. Perhaps a tech world that's more revolutionary in bursts, but maybe less dependable day to day. It's an interesting thought experiment on the type of innovation that dominates.
The report even uses Brexit, surprisingly, to think about the political side effects.
Yeah, it draws a parallel, suggesting that the UK's finance-heavy model created wealth, but also inequality and regional divides.
Which arguably fueled some of the resentment leading to votes for, as the report puts it, economically questionable referendums.
Dryly put, yes. And the point is, a financialized Germany might have faced similar internal pressures. More inequality, more regional divergence.
So could we have seen populism rise earlier in Germany, maybe the AfD gaining ground sooner?
It's possible. And think about European integration. If Germany is economically less dominant, maybe running deficits, but potentially more politically unstable internally, how does that change the whole EU project?
A very different path for Europe. Okay, one last major area, climate change. Today, Germany's industrial base, even the carbon-heavy parts, is vital for making green tech, isn't it?
Absolutely. For wind turbines, solar components, EV batteries, and parts. That manufacturing know-how is crucial for the energy transition.
So the report asks, without that deep German expertise in actually making things, is Europe's transition slower?
Or just much more dependent on manufacturing imports,
Yeah.
particularly from China, maybe even more so than today.
So this whole counterfactual really boils down to that core tension, doesn't it? Manufacturing versus services.
Exactly. High-value manufacturing often means broader prosperity, needing patient investment, building skills over time.
Versus high-value services, which can generate wealth faster but often concentrates it, and carries that risk of political instability if the benefits aren't shared. The report's analogies were good here.
Germany is the responsible one paying the bill. Britain may be skipping out before dessert. A bit cheeky, but it captures a certain dynamic.
It does. So we've journeyed through this alternate history, huge changes across the board. European economics, global trade, technology, even politics.
And all tracing back to that one potential decision point in the early 90s, finance or manufacturing.
And it's not just looking back, is it? These questions about industrial strategy, resilience, where value comes from, they're incredibly live issues for countries everywhere right now.
Definitely. Emerging economies, developed nations, everyone's grappling with this. Technological sovereignty, supply chain security.
Which brings us to the final, really provocative question the report leaves you with, thinking about today's world, more economic nationalism, fragile supply chains.
Would that financialized Germany have been better off or worse off in this 21st century geopolitical landscape?
It's tough. As the report points out, sanctioning the country that makes your high-end cars is maybe harder than freezing the bank accounts that finance them somewhere else.
It certainly gives you something to think about. A different kind of power, perhaps.
Indeed. Well, thank you for joining us on this fascinating deep dive into what might have been.